It's time to strike gold in this video where I talk about the rise of rare earth mining companies and what the driving forces are behind this new gold rush. In this video, we'll be looking at the catalysts driving demand and how government intervention might just play a major role in their ascent to new heights. Hey everybody, welcome back to Dollars and Cents, helping you make sense of making dollars. Remember, if you enjoy the informational investing content on this channel, to like and subscribe. With that, let's get right into it. What's driving this renewed push for rare earth mining companies? Well, I believe there are two huge catalysts that we need to factor in. Real quick, for those of you who are newer to investing, a catalyst is basically an event causing a dramatic change in a stock's price, most often in an upward direction. The opposite of this is called a headwind. This is an event that causes a dramatic downswing in a stock's price, although we're not going to talk about that in this video. The first catalyst is short-term, and lies with Janet Yellen and Jerome Powell, the leaders of the Treasury and the Federal Reserve respectively in the US government. Specifically, Jerome Powell has said that the Federal Reserve will not stop buying corporate bonds or raise interest rates anytime soon, as the Fed is pursuing a path of a maximum employment and inflation around 2%. Of course, you can check the links in the description below if you're interested in reading more about the policies and future plans of the Federal Reserve, or if you have any questions or just want to talk to me about investing in general. I've also got a Twitter and Discord for that in the description below. Anyway, what does Jerome Powell mean when he says that? When the interest rates of Treasury notes, more commonly referred to as T-notes or T-bills, are low, the overall strength of the US dollar in relation to foreign markets becomes weaker. Right now, that's exactly what's happening. The US dollar is becoming worth less in relation to foreign currencies. Most goods like gold and silver are imported, and their prices are controlled by these foreign entities. The cost of importing keeps rising too, while US goods are becoming cheaper in foreign markets. This is important for later, but for now, I want to stay on topic of the weaker US dollar. As you grow older, you might find yourself wanting to move your money away from riskier assets to stabler ones, such as bonds and rare metals like gold and silver. When there's a large market crash, for example, the value of said rare earth metals skyrockets, which could be a catalyst in and of itself. The weaker US dollar, further driven by the COVID lockdowns of 2020 and the mass printing of more money, you can't buy as much gold or silver, and the prices of these metals went up by hundreds of dollars per ounce. Demand went up, therefore price went up. Remember that the markets for these imported goods are controlled by foreign entities, and the US dollar just doesn't cut it outside of its borders anymore. Yet, there's no inflation, and there are a lot of reasons for this that we'll save for another video. You might be asking yourself, well, how does all this relate to rare earth mining companies? Well, I'm glad you asked. The first catalyst of the two I mentioned earlier is the renewed push for rare earth mining materials is the weaker dollar. Since the US dollar is weaker, it means that the importing of these is more expensive. If we couple that with investors' insatiable appetite for gold and other precious metals, we've got on our hands a recipe calling for more foreign companies to sell their rare earth metals and minerals to the US at higher rates. This is currently favorable and advantageous to foreign miners and companies, not as much the American miner or investor. The weaker US dollar as the first catalyst for the rise of rare earth mining companies is unfortunately unlikely to last long term, but as I said earlier, I'm bullish on the long term of these companies, so with that, let's get into our second catalyst. With that, I present catalyst number 2, magnets. That's right, stick and ball magnets making a big comeback 2021, and I'm all for it. No, but seriously, magnets are back in demand in a newer, bigger way. Motors for electric vehicles. In recent years, we've seen a significant rise in the sale of electric vehicles and electrical vehicle makers like Tesla, General Motors, and NIO. The hype around electric car makers and the government's push for clean energy has caused a surge in both sales and stock prices. This has made many other new EV makers to go public as well. Lucid Motors most recently was looking to go public via SPAC. And despite having never built or sold a car, Lucid Motors has almost a higher market cap than Subaru, an established car maker. To make an electric car though, you need magnets and other rare earth metals, such as neodymium and dysprosium, though the latter isn't used as much. It makes sense that these companies, MP Materials, Lynas, and BHP Group, are excellently positioned to benefit from the increased demand for these exact rare earth metals for which they mine. Let's talk about MP Materials specifically though for just a second. Mountain Pass Materials, or MP Materials, is actually a really neat company. Initially struggling, MP Materials was picked up by the hedge fund JHL Capital that helped turn the company around for the better. And in June, via SPAC, it went public. A month later, MP Materials won a preliminary contract by the US Department of Defense that later transformed into a full-blown Defense Production Act Title III grant worth about $10 million in funding. And finally, Mountain Pass is the only operational rare earth mining and processing facility in the US. Despite that, it accounts for around 15% of the global rare earth materials production. For that alone, it might be worth investing in, or at least giving a good look at. With the weaker US dollar due to low interest rates from the US Federal Reserve, the heightening demand by investors for foreign-controlled precious metals like gold and silver during the lockdowns, and the increased production of electric cars using rare earth metals and magnets for clean energy, companies like MP Materials, Lynas, and BHP Group stand to make millions in this new sort of gold rush. Even if the US dollar strengthens and the demand for gold by investors wanes, electric cars produced by companies like Tesla continue to increase in popularity, and they'll need these rare earth metals more and more. Between that and the US government awarding contracts and grants to US-based rare earth metal companies like MP Materials, I believe the gold rush of the 21st century is only just starting, and investing in them might be worth more than gold in the future. Of course, I'm no expert, and you should definitely do your own research before investing in any rare earth metal companies. I just hope I could give you some insight into what I think might be a golden investment opportunity. With that, I hope to see all of you in the next episode of Dollars and Cents.